Hey bosses, thank you so much for checking out this video. If you can do me a favor, click the subscribe button underneath the video and also tap the bell next to it. That'll make sure you get access to all the Invest Like a Boss videos as soon as they are available.
What's up, bosses? Derek Sparks here. Got a really awesome interview for you. I'm talking to the CEO of FarmTogether. His name is Artem Milinchuk, and they are putting together some cool offers for investors there. A lot of people don't think to add farmland to their portfolio, but it's something I think you should definitely look into. Fintech has taken over the whole industry. There's less land available, but there's more demand because there's more people and we need more food. So I think it totally makes sense. Check out my interview now. Once again, it's Artem Milinchuk with FarmTogether.
It's been a category that a lot of our listeners have asked about, but up until recently, I don't really think it was very possible to invest in it. We're talking about farmland investing. There's some new fintech out there. One of the companies that stood out is a company called FarmTogether, and we're talking to their CEO right now. It's Artem Milinchuk. Welcome to Invest Like a Boss, Artem. How's it going?
Thank you for having me, Derek. Good to be here.
So why don't we just start off by you telling us about yourself a little bit and what brought you to farmland investing? I know it might not be the sexiest thing to invest in, but it looks like you guys have a lot of great prospects going. And this is a new segment. Well, not necessarily a new segment, but a segment that I think a lot of the casual investors, at least, haven't even thought about. So tell us about yourself, how you got involved in this, and what gets you excited about farmland.
Yeah, Derek, it is very new and very exotic for a lot of people, but at the same time, it's the oldest asset class in the world. So I always find that dichotomy very ironic.
Right.
For the longest time, you would measure your wealth by amount of land you have and gold, of course. And we sometimes call farmland gold with a coupon. But my story is most of my professional career has been in finance and in investing, and a lot of that sector focus was around food, agriculture, and farmland. And personally, my story is I was born in Soviet Union, raised in Russia, and moved to Canada in 2007 before moving to United States in 2016. And for people who kind of remember the 80s, 90s history, and sort of what it was like if they have some insight into living in Russia at the time, food was very scarce. Like literally, there was nothing on the shelves. And so people were giving these little plots of land to do essentially subsistence farming. Whether you were, factory work or PhD, you would still go during the summers, what we call, few potatoes and plant your potatoes. And so it just gave me, I think, this very, very healthy eh, kind of love and comfort around owning land and food, where no matter what happens, you still have that core ingredient of our very existence, right? Food and water. And so to me, FarmTogether and farmland is just a way to open up this asset class to everyone, to make it available to everyone's portfolios, and then also to bring capital to farmers and landowners and creative capital, especially. It's a very underserved field right now by both fintech, finance, and tech. And so we're excited to work in such a large market that still feels very virgin in a lot of ways.
Yeah, it is really strange that it's one of our oldest forms of wealth and land ownership, but it's largely been overlooked. So, what can you tell us sets farmland investing apart from your standard commercial or residential real estate? How does it differ? Is it correlated to residential or commercial real estate, or what can you tell us that sets farmland apart?
So I like that you mentioned real estate. I think definitely farmland broadly should fall under the real estate category. And the reason for that is that real estate broadly is a rental product. You buy a building and it appreciates in value, hopefully, plus you collect rental income. And there also might be some improvements as well you can make to improve the value of the building. And so farmland in a lot of ways is like that. You also buy it for that rental income. You buy it for price appreciation. You can make improvements there. But in a lot of ways, farmland is also like timberland to some extent. There is sort of this natural progression to the value of the land and in case of permanent crops that we'll get to in a second, of the trees just growing naturally by themselves. So you get that kind of nature-driven price appreciation. It's also a little bit like infrastructure, where it's such a vital part of a country's life that some people consider it, social infrastructure, just as you would like schools and hospitals and roads and bridges. So it's very very interesting asset class, but I would definitely put it in real estate. And then Derek, to answer your question about correlation, farmland is mostly uncorrelated with almost any other asset class. it is indeed the most correlated to real estate. Historically, it's been around 0.4, which is still not that high. In 2020, what we're seeing is that land has decoupled from parts of the real estate market as well. As you can imagine, places like apartments in San Francisco, New York, right now are not doing that well, whereas farmland has been steady as she goes for the last 4 quarters. And so we see that, completely decoupling from some parts of the real estate market as well.
Totally makes sense. I mean, pandemic or not, people still got to eat for sure. So, as far as it being correlated to a real estate or anything, how does farmland compare to more traditional investing? Stocks, bonds, other asset classes. I know your site farmtogether.com has a lot of great resources on this. How would you say farmland compares to something more traditional?
Yeah, absolutely. Let me run you and your audience quickly through the history of farmland and then what we think it will do going forward.
Sure, sounds good.
So broadly, farmland as an index, where it was actually, an independently verified institutional index, came about in the early 90s, and it's called the NCREIF Farmland Index. So a lot of the data I'll quote will be from that index, and it's getting bigger and bigger, and we are becoming members of that index as well. So the NCREIF Farmland Index from 91 to 2019 has delivered a 10% plus return in total returns, so rent plus income. That's actually higher than almost any asset class: stocks, bonds, gold, commodities, infrastructure, timber. What's also really exciting is that when you look at the other side of the investing equation, risk, and if you use volatility as one of those proxies for risk, farmland volatility has only been about 6.97%, which is slightly higher than bonds, much lower than stocks, and then public and private real estate. So very low volatility as well. And we'll talk about that a little bit as well. So it looks very strong historically.
And correct me if I'm wrong. I believe that 1991 was the first year that data is available. There hasn't been a down year since then as well, correct?
That's correct. And it's only been, I think, 2, 3 down quarters, but by down, we mean like minus 0.1%, which was, for example, the case in Q1 of 2020.
Which is amazing because I know if we use, let's say, the S&P 500, it's had good years. It's had, years under 10%, but there's been some down years too. But that's amazing that, we're 30 years into this index and there hasn't been one down year. So definitely speaks volumes about farmland.
Yeah, I think, and look, part of it is the function of farmland not yet being open to sufficient amount of capital, so you don't have those boom and bust cycles. And I think as farmland becomes mainstream, we might see kind of those cycles going up and down, but we're still far from that. And then
Okay, well,
secondly,
oh, sorry, go ahead and finish.
yeah, and then secondly, when you think about sort of farmland overall, it has that very strong tailwinds, which is growing population, improving diets, and decreasing supply of farmland. So you have something that is just a almost intractable force that keeps pushing farmland up because they don't make it anymore. Whereas population keeps growing, people want to eat better and better, and urbanization, climate change, and other factors decrease the supply.
That's exactly what I wanted to talk about. Farmlands, we're getting less and less. We're building houses, subdivisions, whatever it may be. All that farmland is getting sucked up and used for other purposes. So how are we able to make more food with less land? Is there a role that tech plays in that? Obviously, we now have fintech jumping in to this farmland investing, but how does actual tech play in the role of an everyday farmer?
So tech is a big part of why farmland prices have actually increased in the last 50 years. If you look at the 50-year time horizon, farmland prices have increased on average by 5.9%, which is just incredible. Now, part of that is inflation, part of that is that supply-demand dynamic, but there's a big component in there, which is a little bit like Moore's law. Farmland productivity grows by an average of 3.2% every year since we've been measuring since 1947, and that is whether it's green revolution, whether it's better genetics, whether it's variable rate application, which is kind of better application of fertilizer, whether it's better, ag tech today, we find ways to kind of produce more and more on the land without compromising quality and without needing more land. So that's a big part of it. And I think what we're excited about in the next 5, 10, 15 years is, of course, better genetics, better use of water, fertilizer, something we call regenerative as well, which we can talk about a little bit. and that autonomous farming equipment, whether it's the drones, whether it's the driving. Um, an example I always like to use is right now, if I want to irrigate my farm, there's a foreman that needs to drive there, switch on the tap, be there for 8 hours, switch it off, drive back. There is a solar plant right across the farm. There's amazing connectivity. And now with Starlink, we're getting more and more of that completely independent of the landline's connectivity. I can probably do that remotely. Like I don't need necessarily someone to drive there and do it. So there's also not just the sort of sheer yield productivity of the soil. There's also the decreasing cost of farming that I think can lend to better prices for the consumer, but also better returns for the farmer owners and the farmers. So it's a win-win-win across the board.
Totally makes sense. I think a lot of people are still stuck in the idea that, there's the one farmer on a tractor, but that is getting less and less. And I feel like a lot of farmers spend more time at a desk now than maybe even out in the field.
That's
So
very true. Very
lots of
true.
cool stuff happening. I want to touch back on something you mentioned as well earlier, that a lot of the market, a lot of the investors are not in this asset. So, like I said on your site, there's a lot of good resources. You claim that farmland is a $10 trillion global asset, yet only 2% of investors actually have part of their portfolios in farmland. Why is this? Is it just pure access to be able to invest, or are there any other reasons why such a small amount of the population is invested in farmland?
Yeah, and it's actually it's even less than that. So the total market is indeed 10 trillion, but it's 2% of the US market that is owned by
Gotcha.
investors, which is 2.5 trillion, which is still the largest farmland market in the world. And that could be broadly true for the global market, just we don't have as good data on the global market as we do on the US market.
Sure. Thanks for
Um,
clarifying that.
and the reason for that is really, if I can start sort of broadly, part of the story is alternatives as an asset class are just now opening up. If we look at 2008, 3 trillion was invested into alternatives, meaning anything beyond bonds and stocks, gold, crypto, real estate, hedge funds, infrastructure, timber, all those kind of new asset classes. That number stands at 10 trillion today, roughly, but it's still a drop in the bucket given the global, I don't even know how many $1 trillion market in the world. So part of farmland opening up is that it's just following in the broader trend of all the other alternatives opening up. And alternatives are forecasted to reach 14 trillion by 2023, 2024. But part of it is the function of the supply side of farmland. It's a very opaque, fragmented market. And historically, farmland would get passed on from parents to children. But what's happening now is two things. One, kids don't want to be farmers anymore, although I think it's actually a really great profession and people should go into farming. It's the stuff that's not popular that brings you money. And then
Yes.
B, the average age of farmers approaching 60. So you have farmers now retiring en masse. And what it means is that USDA expects now that, and this is a crazy number, 70% of the market of farmland will change hands in the next 20 years, counting from 2015. Think about it, more than half of all farmland in the United States, we're talking millions and hundreds of millions of acres, will become available. A lot of that will still go to the kids, but a lot of it on the open market. So it's also a function of availability, where until the last 5 years, there just wasn't enough supply as well. And then there's a lot of other factors that are kind of smaller, but in terms of the big driving factors, those are, I would say, the most important.
Sure. So I think ironically, it's not that what is that millennials don't want to be farmers, but they want to be in the farmland space. A lot of our audience is millennials, and they've specifically requested they want to talk about agriculture. So I think more owning it as a digital asset, they don't necessarily want to get their hands dirty in the dirt and plant the crops, but there's definitely interest out there for farming. So I think the future looks good, and it seems like a really great time to be involved.
Absolutely.
So I want to touch on at the time of this recording, we are about to pass our third stimulus package in the U.S. economy under President Biden, and that's going to be potentially $1.9 trillion. And with all this money being flooded into the economy, I think inflation is definitely on a lot of people's minds. How can farmland help you hedge against inflation?
Yeah, thank you for bringing this up. It's actually another important factor that I think is driving interest in farmland. When we look historically, farmland has been a better hedge against inflation than even gold. And the reason for that is very simple. It's first principles thinking. Thousands of farmland products actually compose the CPI, the inflation index. When we think about farms, we think, cornflakes maybe, right, or almonds. but it's really what we call food fiber fuel feed. So it goes into so many other applications. Penicillin is made using products of farms. So because of that, kind of the inflation is almost a component of the farmland return. So you have almost this mechanical relationship with inflation. And indeed, a lot of our investors on the platform, especially when investing in row crop farms, corn, soybean, that tend to be kind of low risk, low return type products, they call them bond with a better coupon that is inflation protected. So with farmland, you get very stable cash flows, you get that price appreciation, and you get inflation protection. So definitely, I would say that I don't know what percentage, but it's high. A lot of our investors are in farmland because of inflation and the scare exactly that you described, that all this money printing, what does it mean for inflation in the medium term?
Great. Just one more question on the actual business of farmland investing, and then we'll get into more specifics on FarmTogether. Obviously, these stimuluses are being passed because COVID-19 going on. So with COVID-19, I know here I live in Los Angeles myself. You had said you were in San Francisco, but you're actually in Portland right now. So everybody's moving around. They're moving out of the city. LA is a ghost town right now. I love the traffic, but it's not the same. Everybody's moving out. They want some land for themselves. So is this affecting availability of farmland? Is this mass exodus? Is this people going out and absorbing farmland so there's even less available? Is it in turn, is that driving up the price of farmland? Or what are you seeing with this trend of the mass exodus out of the city?
No, I think we've seen more people moving to smaller cities. Definitely heard some people kind of moving back to small towns and kind of coming back to the parents' farm a little bit. So I hope that will introduce more interest in the younger generation to kind of take on the family business. But broadly, we have not seen, well, one, any weakness in farmland prices because of COVID or any sort of perceived, financial stress that farmers may have. We have not seen, well, we have seen short-term hits to certain products like almonds in Q1, Q2 that, but this was mostly related to things like logistic difficulties. And also almonds are a very snacky product, which is, bars and travel, which is not happening right now. So they've been suffering a little bit. But broadly, no, we haven't seen any downside. In terms of upside, though, we also have not seen that specific factor influencing the farming prices. There's other factors at play. But in terms of kind of people leaving the cities, I think it's more, helping second, third tier cities. Right now, I'm technically actually in Vancouver, Washington, part of the Portland area. And Washington doesn't have income taxes. So right now I'm hearing a lot of companies like HP moving part of the workforce there right now. So I think those states and cities will see an influx. And indeed, look, personally, I have to say, moving from San Francisco, being able to enjoy a little bit more space, a little bit user-friendly, consumer-friendly prices has been definitely very nice.
That makes sense. I saw, especially the tax factor. I saw an article recently. U-Haul publishes their annual report of where people have left and gone to. Number one and number two were Texas and Tennessee to move into, and the last city or the last state on the list, number 50, was California. So it's wild how many people are
It
leaving.
is wild.
Anyways, let's talk about FarmTogether itself. That's why we're here. So let's just start it off right off the bat. Who qualifies to invest in FarmTogether? Do you need to be accredited? Do you have to be a U.S. citizen? Go over who your investors what they have to do to qualify for FarmTogether.
Yeah, so you actually don't have to be a US citizen, which is sometimes a surprise to a lot of people. There are certain states that prohibit foreign ownership, like Oregon, so you cannot invest in that if you're a foreign citizen. But most countries that fall under the FATF framework, which is the anti-money laundering, anti-terrorist financing framework, can easily invest. The minimum right now is about 15,000. Sometimes we have a promotion where it can be 10,000. If you are in the United States, though, you do need to be an accredited investor, which typically means income of 200,000 to 300,000, depending if you file single or jointly, or your net worth needs to be above $1 million, excluding primary residence. Having said that, so go ahead, Derek. Yeah.
Sorry, it's this question that comes up a lot on the podcast with our listeners. So I just want to make sure we get it right. If you're not a U.S. citizen, do you also have to be accredited?
If you're not a U.S. citizen, there's a different flow for you. There's still certain requirements that are kind of very specific and a little bit country by country. So we you can check it out on the website, but I don't think I'll be able to fully get
Yeah.
into that on this call.
Sounds good. And is there any plans in the future for a non-accredited fund, maybe, or some other way to let non-accredited investors get in on the action?
Yeah, absolutely. So there's definitely plans to let in non-accredited investors. There was actually a new regulation that was passed by the previous administration to simplify some of those non-accredited rules, but that's right now been paused, so we don't know what's going to happen with it. It's a little bit in a limbo. But with accredited investors, you do have now new rules that already are in place that for certain professional licenses like Series 7, the broker licenses, and we expect more and more, you do qualify now. I do believe also that if you work with an RIA, then we can work with you for you to invest into some financial products that we have. So there's more and more of that happening. So either way, register, stay tuned, and we definitely, as soon as it's we have the time and as a team we can accept non-accredited investors, we will, because we want kind of everyone in America own a piece of America, as we say. So
We're all about
definitely,
that too. We want
yeah,
as many investment opportunities as possible. I know it gets frustrating for some of our listeners at times when
I
they go,
know,
I
yeah.
love this, but I can't do it. So I think you can still sign up for an account at FarmTogether, correct? Even if you're not accredited. So, and I would assume the second you have something in place, they're going to get a load of
Yeah,
it.
please sign up. Look, I feel the frustration. Technically, even if I wasn't sort of the CEO of the company, I wouldn't be able to invest in this deal. So it's really frustrating. So, and we pay ourselves startup salaries, so I'm not making like crazy bucks here. Um, we really hope that this new administration as well will look into the regulations, and definitely the crowdfunding industry overall is working hard to sort of explain the risks. Because look, I hear the SEC as well. You don't want people investing into like crazy stuff that's not vetted. I would argue that farmland, by the nature of its sort of inherent intrinsic value, how much is in the land, it's hard to lose all your money. You really need to, I don't know what needs to happen to farmland that suddenly it doesn't have value.
Yeah,
And so
it really
you
makes
like,
you think how they can justify that investing something like farmland is more risky than opening a Robinhood account and going
and
millions of
and and
dollars on
buying
options.
crazy, yeah, 1 week out of the money options. That's a very good point, Derek. Yeah.
Yeah, so I think we're on the right track to getting things turned around. With anything related to the government, it's going to take time. So you can preview some of the listings on Farm Together. I checked them out. Why don't you just go over how your listings work? What is someone actually buying when they invest into a Farm Together deal? You said the average minimum is usually around 15,000. What would they expect to find on the listings, and what kind of data do you provide that's available before you invest?
Yeah, absolutely. Let me run you through the mechanics of the deal, then the target return profile of the deal, and then sort of reporting and documents you get.
Sounds good.
Um, so first, we want to give people as much of a direct ownership of farmland as possible. Especially with the events with the aforementioned Robinhood, where suddenly certain stocks were restricted for trading. We heard some people actually had these stocks being forcefully sold. Um, we want to give people as much of that direct ownership as possible. So every farm is put into its own Delaware LLC, separate entity. That LLC is administered by a third party. So it's, we are on a very good financial footing right now. We don't expect to go anywhere, but there's that additional kind of bankruptcy remote structure that helps you get more comfort around the ownership of land. Um, the land itself is typically operated by set contract with a established farming group or farming family that are well known, typically have decades of experience. So that is taken care of by that farmers. And you as an investor buy units or percentage in that Delaware LLC. And then so you own, and the LLC owns that title to the land. It's always 100% of the land that is bought, at least today. So you have that direct ownership of the land. And so that's really important for us. The tax documents you receive are K1. It's a pass-through entity. And so, by the way, what it means is that if land or the deal is a development opportunity, because of the attractive depreciation tax treatment, that gets passed through. So if, let's say, you put in a few $1 million initially to develop the land, that gets passed through to you, and then you can offset it against your income. So high earners especially, they love that because it gets, they can deduct that from their income. And then in terms of the target returns, so we target net returns, total returns between 7 and 12%. Sometimes it gets a little higher, but this isn't your crypto. This isn't your, Amazon or startup. This
Sure.
is the boring, stable, steady part of your portfolio. The cash flows
We
there.
love boring at Invest Like a Boss.
Yeah.
We talk about the fun stuff, but we really love the boring stuff too. So why don't you tell me, how are those returns generated? You said 7 to 12%. Is that strictly off income from renting the land or leasing the land to these farmers? Is it just the appreciation of the land? Is it crop yields? Is the investor involved in crop yields, in profit sharing? Can you go over where some of this income is generated?
Yeah, Derek. So it's all of the above. Breaking it down, first, price appreciation of the land. We see historically that we talked about the historic land appreciation. We see that going forward. There's also development component when you're planting trees, you're making improvements that flows to the value of the land and then eventually gets realized at sale. And typically our deals are 8 to 12-year hold period. And then and there's no say of any investor or even us when the land gets sold. It's typically a 10-year hold with 2 1-year extensions, and then the land gets sold. There's also exactly that cash yield component, which is the yield of the land. It's either a rental model where you collect rental payments from the farmer and get passed on to the investor, or it's a profit share or a profit allocation, where sometimes the land is fully direct operated by a farmer by a contract where they get a fixed fee for operating the land, and it's a separate type of arrangement. And you as a farmer, so you as an investor, we manage this for you, have the full exposure to the revenue and to the expenses of the farm. And those are typically the highest returning, highest risk types of opportunities. But if you know what you're doing, then you can mitigate a lot of the risk. So it's exactly as you said, it's all of the above.
Sounds good. And I've looked into the subject a little bit. Can you tell us, is it more profitable to jump into a row crop, which I believe is replaced every year, whether it's corn, soybeans, whatever it may be, or a permanent crop, the aforementioned almonds or pistachios or orange trees or whatever it may be? Is there an advantage to owning one over the other?
Yeah, typically permanent crops historically have generated higher returns. It's in the double digits. And that's because of the more specialty nature of the crops. And because when you know what you're doing in terms of farming, then you have substantial advantage over just renting. So a lot of permanent crops also direct operated model, which means high volatility, but higher return. Row crops are and just to sort of take a step back, the reason it's called permanent crops because it's something that you plant and stays on the farm for years and years, like almond trees. In row crops, it's your corn and soybean that you plant every year, and you plant it in rows, although permanent crops you also plant in rows. And that gets sort of replanted every year. And so because of that, as you can imagine, in row crops, it's just really hard to screw up the land. Like, I don't know what you need to do. I mean, dump nuclear waste on it to really decrease its intrinsic value, its productive capacity. In permanent crops, of course, the trees can have kind of more exposure. Someone could come and cut them down with the chainsaw.
Sure.
You need to take more care of them. So you can't really rent them out as easily because you want someone like a long-term tenant. So because of all of that, it's just more complexity associated with permanent crops, which means more returns. In row crops, you expect 7 to 8% target net return, sometimes as low as 6%. But row crops actually have had historic volatility of 3%. And like it's better than bonds in some regard.
Sounds
And so
good.
yeah.
So I'm definitely no expert in commodities, but I've noticed some of these, I believe almonds, even like we were talking about,
Mhm.
can have wild prices in the market. So are there some that's more stable, or does this get factored in that, almonds could be worth, I don't know the prices, I'm just throwing it out. It's, $3 a pound 1 year, and then 6 months later it's $9 a pound or something wild like that. If correct me if I'm wrong, but I feel like I've seen a lot of wild swings in some of these
You
commodities.
definitely have, yeah. And 3 pounds is on the money. 9 pounds is very high. I mean, I hope so. But so you're right, and that's where the high return comes from, the permanent crops, because when you have high volatility, it also the market typically requires higher returns. But overall, as in any commodity, the cycles kind of smooth themselves out over time. That's why we are very firm on our hold periods, where it's typically 8 to 10 years. We don't think you can invest in farmland for like a 2 3 year term. And over that longer period, you see that prices kind of smoothing out, and long-term trends for almond prices are very positive. And so when we underwrite the deals, we will kind of assume that average price. It's a little bit like investing in oil and gas or mining, and then you'll have your volatility. But the prices for the land of almonds, the almond farms, are actually way less volatile, and that's because the buyers and the sellers, when they look at it, they again look at that long-term pricing of the land, and that's why you see almond prices can go from $3 to $1.50, but the farms will not suddenly decrease in price by 50%. So there's a lot
Makes
of
sense.
resilience. That downside protection comes from the value of the land itself. Yeah.
Great. Thanks for answering that. And speaking of hold times, you should expect a 10-year investment term, but we know things come up, and let's say someone needs to get out of the deal. Is it possible? Are you able to transfer it to someone else? Is there some kind of fee you take to do that?
Mhm.
Or is it just 10 years or until the land sells?
Definitely encourage 10-year hold, but we are working on a secondary market. It's not fully up and running yet.
Okay.
So, but it's very doable. There's nothing preventing it legally, technically, financially, or otherwise. And so we do hope that one day we'll have a secondary market. But right now, we encourage people to not take that into account in the investing, just because until we have it, we legally cannot promise that. But we can say that we're working on it.
Okay. Makes sense. And we got to talk about it. So how does FarmTogether get paid? What kind of fees do you take out of these deals?
We try to keep it very simple. So there's a one-time fee at closing that is kind of an administrative expense reimbursement fee that just goes into all the work we put into putting the deal together. And then there's an annual management fee, which is a percentage of fair appraised asset value every year, typically. Yeah. So that aligns us with you. The better the fund performs, the better we do. And those fees are typically 1 to 2%. And there's no really other fees, although we are exploring some other fees to further align us with investors, maybe capital gain fee at exit or performance fees. We try to keep it very simple.
Great. And speaking of capital gains, maybe a way to avoid some of those taxes. I noticed you also have an option for sole proprietorship. Um, the average deal you'd send before is 15,000 on a crowdfunded deal. But what about for our major bosses out there that just want their own deal? How does
Yeah,
that
for
work?
the major bosses out there, we have a bespoke account. So if you have 3 million or more to invest into a farm, we can find a custom farm for you based on your criteria and put the deal together, still source and manage it as we would a crowdfunded farm, but there'll be more control and flexibility for you. So the people especially like it for taxes or to support a particular region. They might be, from a particular area, they want to farm there. So that's a very popular product with the major bosses, as you said, because it gives you a lot of customization and flexibility.
And how cool is it to say you own your own farm and you don't even have to get
Pretty
your hands
cool.
dirty?
Pretty cool. Yeah.
I would be remiss to bring it up. Johnny, who's one of our co-hosts on here, had this really cool, I thought it was a cool idea, but it's kind of cheesy. He thought, if you invest in one of these deals, and let's say it's avocado trees, his idea was, once a year, you should send me a box of avocados. Do you have any kind of special bonus for your investors that they received
Yeah.
as part of the land?
Funny you mentioned avocados because I was just reading that Oprah, I think, bought an avocado farm a couple of years ago because
Oh,
she was
nice.
dissatisfied with the quality of shelf avocados.
I would love to have an avocado tree.
Yeah, that's a very Oprah thing to do as well. I love it. So we do have this right now for our first deal that we did. We don't have it for other deals because the logistics around that are insane.
Okay.
However, I would love to have that. So one thing that we do as a team to also further align ourselves with our investors, we personally invest in every deal. Now, as I mentioned, we earn startup salaries, so it's not millions, but it's something that's meaningful to us. And I would love to receive, the citruses, the almonds, the walnuts every year.
Right.
As soon as we can figure out the logistics, I think that would be a great perk. I mean, I think it just would be, having like a little almonds together or walnuts together
Yeah.
package to come to you.
It'd be really
But
cool, knowing, I had a hand in helping growing these. So it's kind of a cool little perk Johnny had brought up. And I'm sure if he
I
invests,
would
he
love that
expects his bag
as
of
soon as we
almonds.
can. Yeah, as soon as we can figure it out logistically, everyone can expect that. That would be fantastic.
Awesome. It's been really great talking to you. Let's talk a couple more things before we get out of here. What are some good resources or books where people can learn more about agricultural and farmland investing? Because, like we mentioned before, this is something that is right in front of our faces, but it's just not talked about.
Yeah, it really is not. And honestly, like this podcast has been great. I would say we've put a lot of work into educational materials and a learning center on our website. So farmtogether.com, you can download white papers. You can read very easy to understand 101s on farmland, how it performs. You can also listen in, even if you're not accredited at the time, to our deals. We do webinars on every deal, so you can ask questions and you can see kind of what are the specifics of underwriting a deal. And it sometimes, initially can seem very daunting, like, oh, there's so many things I don't know. But then when we break it down, there's really a finite number of risks and factors to consider, like weather, soil, water, farmer, what's the end product for the produce that the farm produces. Um, and so I think you'll suddenly learn quite a bit, and then, you'll be an expert in no time. So there's very robust materials that we put together. Honestly, I would say that we have probably one of the best resources on the web right now for farmland investing and agriculture. A lot of materials on the blogs as well. We put out like a few articles a week, so there's definitely a ton. You could spend the weekend going through it and get really smart on it very quickly.
That's so great. So check out farmtogether.com. Lots of great assets to learn more about agricultural investing. You can also go directly to the listings and learn more about these individual farms. Whether you invest or not. Like you said, create a login. You'll get all the information right there. Farmtogether.com. Artem Milinchuk is his name. He's the CEO. Really appreciate your time learning more about this asset class. It's something we're very interested here. Invest like a boss, and I think our listeners will be as well. Thanks for your time, Artem.
Thank you so much, Derek. This was really cool to do.